Okay, all right, welcome back. I mean, the market's not doing very much. It's down about 24 odd points, but to be expected after 2 days of very, very strong gains. 350 points in 2 days on the Nifty, and now it's a flat screen so far. Market breadth, I think, is come back into the positive, is swung back into the positive in a more definitive way. 350 odd stocks separating advances and declines. Sugar and the entire ethanol space, of course, has been in focus. Expectations of the Petroleum Ministry may soon revise the price of ethanol made out of damaged food grains. If this happens, how will this impact key players? Pramod Patwari is Chief Financial Officer at Balrampur Chini. He's joining us right now to take that forward. Thank you very much, Mr. Patwari. Good morning. Prashant this side. The capacity expansion in distilleries is something that Balrampur and others have been very focused on, and that is what many in the markets are also excited about. We had the petroleum minister recently making a comment saying that 20% ethanol blended fuel should soon be available at outlets, at fuel outlets. Could you tell us, what is your capacity now? I think you've recently commissioned another unit. What is the total capacity at right now, and how do you see these comments coming in from the government?
Good morning. Yeah, whatever capacity expansion we announced last year, all those capacities has been commissioned, and currently we are operating at our full capacity of 35 crores annual ethanol production. The recent comment came from the government of India regarding the availability of E20 blended fuel in the country in select cities is going to happen in some time, and we are very hopeful of blending percentage to increase from here on. In the ethanol season gone by, country has already achieved 10% of blending.
What is the kind of price increase that the industry is expecting? Currently, I guess the price is a little over 55 rupees a litre. In the medium term, what could the price rise be for ethanol?
Ethanol prices are set for on an annual basis. The current ethanol prices for the juice-based ethanol is around 66 rupees per litre. 55 rupees is for the grain-based ethanol made out of damaged food grains. And for B-heavy route, it is 61 rupees approximately.
Okay. No, I'm asking you, I mean, that of course is the current price, but from this 55 to 60 rupees a litre, what can the rise be? Can it be, in single digit? I mean, what is the expectation?
This is what I have said, that ethanol prices are announced for an annual, for a year. And those prices are already in place. Government is thinking of reviewing the ethanol prices made out of damaged food grains, which is currently standing at around 55.5 rupees per litre. So if any increase will happen, it will happen in that category only. Last year, government came out with some additional incentive in the mid of the year.
Right. So basically, this announcement with regards to, the ethanol price being revised for damaged food grains does not affect you in any way, because you obviously make juice-based ethanol and the prices for that are upwards of 60 rupees already. But there was another notification recently that came in as well, which said that the incentive will improve on ethanol production from Jan 2023. Wasn't the Food Ministry already giving 100% incentive to mills?
There is a two-part to this. First of all, this calculation is an internal matter as far as the Food Ministry is concerned. It is nothing but to give an additional benefit to those producers who are manufacturing ethanol by sacrificing the sugar either out of juice route or B-heavy molasses. So this was already in place. Maybe they are tweaking with some of the guidelines. And as far as our ability to produce ethanol out of grain is concerned, we do have the fungible capacity in place. If at any point in time our capacity permits, we will definitely make ethanol out of damaged food grains.
Okay.
And how is, sorry, go on.
No, what is, so from damaged food grains, I didn't understand how much is a percentage of your revenues from damaged food grains, and any kind of numbers that you can share with us on what this would mean for your, EBIT performance. It has, of course, improved if you look at it year on year. But can you tell us what is the expectation as we move along in the new year?
So the new distillery which we have set up at Majapur is having a capacity of 330 KLPD per day. If we assume that cane will be available for say 160-70 days, then it will produce around 5 crores liter out of cane juice route at that unit. So we have a balance of around 5 crores liter of ethanol, which can be made out of the damaged fruit grains at the Majapur unit.
All right. And finally, before we let you go, how are sugar prices trending? There were concerns on availability. That's one. And secondly, out of your export quota of roughly 1.9 lakh tons, how much is contracted already? At what prices?
Yeah, we have an export quota of 1.98 lakh tons. Out of that, we have contracted for export in the physical form around 1.4 lakh tons. And we are hopeful of evacuating this entire quantity by March, late March end. Sugar prices at this moment in time are currently in the region of around 36 rupees per kg in UP, and refined sugar we are selling around 37.5 rupees per kg.
Mr. Patwari, how is the sort of upcoming sugar season looking? Can you give us some sense? When we've spoken with you earlier, you told us that, last year was actually the last 2 years, sugar years were pretty bad. Sugar yields were down quite a bit, rainfall damaged crops, etc. Could you tell us how are things looking this time?
Yeah, as far as our company is concerned, you are right that the last 2 years has been extremely washout for us because of the lower feedstock availability. But as we speak today, things are looking okay. So far, so good. We continue to maintain our guidance of around 15% increase in cane availability, which we shared with the investors community a quarter back.
Okay, all right. We will let you go on that note. Thanks a lot for joining in. That's the sugar space. But with the festive season now behind us and domestic cotton trading at a 25 to 50% premium to international prices, we aim to get a demand check from a key garment exporter. Siva Ramakrishnan Ganpati, the managing director at Gokuldas Expos.